Welcome back, folks. This is going to be a value-packed video. We're going to learn a lot of things in this video, and it's my way of thanking my YouTube community for being grateful. Success comes with gratitude. That is a very key lesson. If you want to attract wealth, be grateful. That is the secret to success. In this video, we are going to learn about one of the easiest and most highest probable setup that ICT has taught. Okay? And we are also going to have a look at this price action, right? This consolidation, and this move down, and this move back up. We're going to learn about how we could have traded this entire price action on the way down and on the way back up to this ultimate target, right? Back up to this original consolidation, okay? And firstly, the setup we're going to talk about is the IOFED setup. And this is also a request that has come through from my YouTube community, okay? When you're grateful and you're thanking me for providing you with all the information and the knowledge that I'm sharing, I will always give you more, okay? But first, let me address a couple of very important components, very important, okay? I'm going to take you to a couple of comments from some of my YouTube viewers because it's very important, okay? Firstly, this is the setup we're going to be talking about. Let me just bring this up on Twitter. It's a bit easier to see, okay? We're talking about and learning about this setup, the IOFED setup, okay? At the request of one of my viewers who has continued to thank me and offered gratitude. So I'm going to teach this in detail today, okay? But let me take you to some other comments, okay, on this same chart, right? This is the same chart, okay, that we saw on my Twitter post. And it's a very important lesson I want to teach you, okay? Here's a comment from a YouTube. Only an advertisement. What a shame. Don't know. Of course you don't know. You're never going to know because you're not grateful, right? By saying only an advertisement, what a shame, just because I've added my link here where I can help people one-on-one. My students are loving my VIP community. I'll share with you some of the comments in a separate video. They are very grateful, okay? And they are begging me to provide them with more value. That's what VIP means, okay? Now, because this viewer put that comment, he has totally blocked his mind from seeing what I'm teaching in that chart. In that chart is the exact, I'm going to bring it up on YouTube, on Twitter because it's easy to see. In that chart where he is saying, oh, this is just advertisement, what a shame, I have put the exact reason for my entry. If that student, that viewer, did not block his mind from seeing this chart for what I'm showing, they would have recognized that I've put here the exact ICT bullish signature that I've used to make this income. And all that student had to do was go and do some research on IOFED. However, instead, they've completely missed the lesson because of attributing a negative comment, which does what? It blocks your mind from seeing that which is going to benefit you, the positive side of what I'm sharing, right? By immediately thinking negative about something that is positive is going to block your mind from success, especially the lesson within that post, okay? So gratitude is the secret to success. Always be grateful, okay? You'll be amazed at how that will change your life. Now let's look at another post. This is also very important, right? This viewer says, if you're making this kind of money, why are you selling courses? Okay? Now, why does Anthony Robbins have events? Why do universities have such high fees? Why do those who are knowledgeable print books? Okay? There's knowledge that needs to be shared. And we as humans will not value anything that doesn't require effort. Okay? If we are not jumping through some hurdles to learn something, then that knowledge has no value to us as humans. Okay? Be grateful for the information that you are getting access to. Okay? I've been trading for over 10 years. And I could have continued in that way and not sharing any of this with any of you. Right? I spend more time in my VIP community, right, to help those people than anywhere else. Why? So that I can give them value. I can help them move forward. Okay? So it's an important lesson for you because I'm telling you that the secret to success is gratitude. Be grateful for the things that come your way. Okay? Now, let's get into this very important lesson. And I guarantee you that if you learn this setup, it is going to be the most easiest to identify and it is the most high probable setup. Okay? So let's jump down first to a lower time frame at this time, 8:30. Okay? And I want to first talk about how you could have traded this move down. Okay? So I'm going to jump into a 1 minute time frame. And let's go there. That was Thursday, 8:30. Now, that was a news announcement. Okay? So let's find that. And you need the news because that's where the market makers will inject volatility. There we go, right there. Okay. Now, we're learning about the IOFED entry technique. Okay. And before I start, let me also say that everything I speak about on my YouTube channel or within my VIP community, it is nothing new. There's nothing new under the sun. Nothing that I've invented, nothing that I've come up with, right? I have learned from ICT. And 99% of the concepts that I use are from Michael, right? ICT signatures. So none of this is mine. Okay. I'm not claiming any of this to be mine. I've learned it from my mentor, ICT, and from a few other very well-known traders. Okay. Now, IOFED stands for Institutional Order Flow Entry Drill, and it is formed on the basis of a fair value gap. This move down, actually, is that the right one? No, that's not the right one. Let me find it first. Okay, so here it is on the chart, Thursday, 19th of September 2024, 8:30 a.m. is a news announcement. And that's important because that's when the market makers will inject volatility into the markets, okay? Now, this is going down, and I'll talk about this in a moment, okay? But you've got to have some key levels marked on your charts. You've got to know the context. Why is this going down? What is this potentially reaching for, okay? So, as I showed you on the 15-minute chart, this is going down, right? This is that same day, Thursday, 19th of September, okay? Starts at 8:30. I'm going to teach you exactly how you could have traded this move down. You've got to have the context in the back of your minds. Where is this reaching for? And you've got to be watching the clock. So this move down starts at 8:30. And what's it reaching for? Where's it going? Where is this going? You've got to think about that. These things should be marked on your chart in advance because on the left-hand side, this chart has already printed. Okay? This you can already see before you get to this, which is the 8:30 news announcement. Okay? And you can see that it has reached down into what? Where does this bar go down into? It takes this liquidity, right? We can see this liquidity has been taken, equal lows, and this fair value gap is a level of inefficiency that the market has come down into. Okay? And then time's important. This here is 9 a.m. When does the New York equities market open, and what time have I said is the ideal time to trade within the New York session? 9:30. So 9:30 to 10 a.m. takes this out again, right? Stop hunts. Anyone that's in that position from 9 a.m. and comes into this fair value gap, that is the discount PD array. Even this is a discount PD array because that's a fair value gap as well and has taken liquidity. But time is more important. Okay, this here is at 10 a.m. Okay, so you always have to have time. Right? Always got to be watching time. Now, let's get back to the actual setup and learn about the IOFED. IOFED is simply a fair value gap, right? So here you can see as the market's coming down, it creates a fair value gap. And this particular setup taught by ICT, the Institutional Order Flow Entry Drill, IOFED, is a way for big fund managers and institutional traders to get in on the move down. And what they do is the fair value gap is made up of 3 candles. Okay, you should already know this. Let me give you a very quick review of what a fair value gap is. It's when you have 3 candles. This is candle 1. This is candle 2, right? The big one. This works when you have large down candles. Remember that. It's for large down candles like what you see here on the chart. And this here is candle 3. And notice that there's no connection between the high here of candle 3 and the low here of candle 1. And therefore, there's a gap there where there has been no price delivery up in that zone, right? It's all sell side price delivery. That's what a fair value gap is. So there's a fair value gap there, okay? And this here, the high of candle 3, is where that fair value gap starts. Okay, Institutional Order Flow Entry Drill is 1 tick above that high, which is what we see here. Notice how the market, the pricing algorithm, goes up just by a couple of pips above that high, just touching and getting inside of that fair value gap, just by a couple of pips, and immediately drops. That's the IOFED entry drill. Okay, let's look at this next one, a large down candle, right? 3 candles make the fair value gap. This here is the high, right? See that candle? Candle number 3 is high. And look at the next candle. It doesn't have to be the exact next candle. It's preferred to be the exact next candle. But what you want to do, IOFED entry is as soon as price trades inside of that fair value gap, right? 1 tick above that high of candle 3, institutions are getting in. Okay? Here you see it again, right? Fair value gap. And you see as soon, the entry is going to be as soon as price trades above this high that created the fair value gap. In this case, it's going back up into this wick, which is known as immediate rebalance. Okay? That is the IOFED entry drill. Okay? It's as simple as that. You could have traded that all the way down. Okay? And you're watching time. We're getting closer to the new hour. 8:50, 9 a.m., right? And at this point, at 9 a.m., we've taken that liquidity that I've shown you, and that's what you should have on your charts to know where this might be coming to a close. Once you take liquidity, that should be your key point of interest. And you're watching time, getting closer to the new hour. Okay? That simple strategy is so easy to identify with a very high probability of success that is almost guaranteed, but of course nothing's guaranteed, okay? From the first IOFED down to where we know in advance where this might be reaching into, right, which is this fair value gap, the low of that candle, which would be the target on the way down, is, let's have a look, what's the low there? Comes in at 2573.28, okay? Look at the numbers up here. I'm trading the low of that candle, 2573.28. Why am I selecting that low? Because that is where I would be targeting, because that is where I have equal lows and a fair value gap. I'm also watching the time. We're getting closer and closer to 9 a.m., which is a new hour, at which point the market could reverse, okay? So that move from where we got our first IOFED entry down to there, right, is more than 140 pips. Could we have grabbed 50, 60, 70 pips on that move down with high probability? Absolutely we can. Absolutely we can. That is the IOFED entry drill, okay, where you have the market continuously creating fair value gaps and giving institutions a precise sniper entry to get in on that move. Big candles down, fair value gap, one tick above the fair value gap, institutions are getting in. Big move down, fair value gap, one tick above that fair value gap where it opens, right? Let me try and draw that again. Institutions are getting in, right? Fair value gap, one tick above that high where the fair value gap is created, institutions are getting in. This was an immediate rebalance. Wow, they're going back up into the previous week to completely balance that price range. Okay, coming down into the liquidity on the left, right? 2573.28, right there. That entire move from the start of the first IOFED entry all the way down to the target. Okay, remember, I chose that target because there was that equal lows on the left that we could see on the 15-minute chart. Plus, that is where the fair value gap on the left-hand side on that bigger chart, bigger time frame exists. This one here, right? That's the low that I'm targeting. And we're getting closer to the new hour. It's as simple as that, folks. As simple as that. From the first IOFED down to the bottom there is over 140 pips. Okay, from 8:30 down to 9 a.m., 30 minutes. Okay? Then there's an opportunity, if you understand what's going on here, to trade this back up. All this is a reversal, smart money reversal at a key time, right? This is all happening at 9:30 a.m., 10 a.m. New York, okay? Where we're coming into key discount PDRAs, okay? Now, this is a market maker buy model. I have done a separate video on this. Here's your original consolidation. This is the manipulation. This is the smart money reversal, okay? And then the market needs to go back up and above through, up to the original consolidation, okay? And that's what we see here, right? Now, there's already a video on this, so I don't have to go through this because on my Twitter profile, I talk about that. It's there, right there, okay? The ICT market maker buy model, right? So you can look at it there. That may be a different price action one. I'm not sure if it's exactly this one. I think it is, but even if it's not, it's a different example. It's the same concept, okay? So IOFED, look for these. These are easy to identify. Big down candle, and you're coming back up to the first part of that fair value gap, okay? Now, it's not just for moves on the way down, right? As I've shown you, this London trade, this London trade here was based on IOFED, okay? Let's see and have a look at this. This was done Friday, London. Let me find this one. This was on a, let's go to London. Let's see if we can find this trade. So it's for any direction, okay? So that was, let's see, what time was that? At 4 a.m. London, okay, on Friday, 4 a.m. London, okay. So here we go. This is all Friday, and where's for right there, okay. Right there, you can see we have a big up candle. Let me make this bigger. Big up candle, fair value gap. What's the low of this? Look up here. Low here is 2605.03. That is the start of. That's the start of the fair value gap. What's the low of this? 2604.84. That's all you need, right? That is designed for the institutions to be able to get in on large moves, okay? Look at that entry, and market moves up, okay? That's what that entry was about, right? Now, that entry was on a 5-minute chart. So if you look at that image, okay, that's the 15-minute IOFED already on my chart, okay? We come down, right? 1 or 2 pips below, straight up, bang, okay? So it's not just a setup for a move down, okay? It's also set up for a move up. There was another one here yesterday, okay? Large candle up, right? There's your fair value gap between that and that, okay? Immediately under that, a couple of pips, also balancing this fair value gap, and bang, straight up to these highs, okay? So a lot of opportunities with the IOFED. You got to study the charts, right? You got to go back and you got to learn it, okay? So I've given you what you need to understand IOFED, institutional order flow entry drill, okay? Your job now is to go back, rewind this video, watch it, and identify these on your charts. Okay? Hope that video is useful. I will now talk with you in a future video.